Hey everyone, and welcome back to another video for today. First of all, happy 4th of July to my American viewers, and thank God it's Friday for all the rest, basically. In today's video, as promised, we're going to talk about non-American equities, non-American stocks, more specifically European ones. So here I'm showing you the 600 names from Europe. As you can see, a lot of them are actually in the finance sector. Now, this is the year-to-date performance, so a lot of green, but some companies that we've touched on as well are deep in the red. So Novo Nordisk, for example, down 29%, LVMH down close to 25%, ASML down 2.2%. But then you've had a lot of companies, one of them that we'll touch on in this video, that are up quite significantly, especially in the defense industry. So we're going to talk about 4 companies, but I'll add 2 extra ones, just a plain overview of those 2 companies. It's a mix of various industries. As always, I'm not here to waste your time, so here are the 4 names plus 2 extra. I hope you keep watching, and if not, leave me a like and a comment. We really appreciate that. And if you're new here, hit the subscribe button. We're well on our way to reach 100,000 subscribers. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let me start off with the 2 bonus names. One is Rheinmetall from Germany. So yes, here you can clearly see what has happened. I mean, yes, it's true. It would have been much better to buy this stock at the start of this year or a year ago, or even at the end of 2024, as some of you actually mentioned in my comment section. I still think there is a lot of growth ahead here. Now, Rheinmetall being a European player, more specifically a German player, where do they generate their revenue from? This you can see here on fiscal.ai, previously Fintech. It's a stock research platform that you've seen on all of my videos. You can check them out. There's a link down in the description and in the pinned comment. You can get 15% off. You can also, if you're a new user, you'll get Fiscal Pro for free for the next 2 weeks. They also recently raised, I believe, $10 million or so. So it's a very, very serious platform. And you can get all of these segments and KPIs, yes, even for European companies, even for Chinese companies, Latin American companies, and especially also US ones. You can go over their transcript. Basically, you can do everything you need on this platform. Do check them out. Link is down in the description and in the pinned comment. So where does Rheinmetall generate the majority of their revenue from? Well, as you can see right here, a big part of the revenue does come from Germany, of course, no surprise there. And we've seen actually a big increase right here over the last, year. This is on an annual basis. But you can clearly see that other European countries have been, increasing their spend with Rheinmetall. If we look at North, Middle, and South America, that has basically been flat. Looking at Asia and Near East revenue, also flat-ish over the last couple of years, and then other regions remains flat. So the majority right now seems that it comes from one, Germany, and the other European countries. Interestingly enough, more recently, we've had an announcement that Anduril Industries and Rheinmetall will partner to design and manufacture the Barracuda, Fury, and Solid rocket motors for European defense. Anduril is one of probably the only companies in the private sector that, if they were public tomorrow, I'd probably allocate a significant amount of capital in that position. Hopefully it's a DPO and not an IPO. Now, how do they generate revenue? They generate the majority of their revenue through vehicle systems revenue, sales, basically weapons and ammunition. And then we've got here electronic solutions revenue, which is the smaller part right here. But that has actually been growing at, compound annual growth rate of 14.11% over the past couple of years. But we can see that weapons and ammunition, which is this part right here, that has grown compounded 22.6%. Whereas vehicle systems has grown at 19.81%. They did not provide last fiscal year any numbers for the sensors and actuators and for material and trade. Moving on to bonus pick number 2, and that's Greggs. Yes, very, very simply put, the UK company. Very, very simple business to understand. Now, Greggs is a very, very small company compared to Rheinmetall and compared to the other companies that we're going to talk about. Market cap, $1.73 billion. For those that don't know what they do, they operate as a bakery food on-the-go retailer in the United Kingdom. So pretty simply put. Right now, as you can see, you might say, oh, this is a very boring business. Yeah, but boring can also be good. Margin-wise, pretty good for this business. Growth-wise, we have seen, well, some tech companies that aren't even expected to grow as fast as Greg's, for example. Now, more recently, they did provide us with a little update, and they said the following, right? You've seen the stock go down, and they said the following. While total sales increased, like for like, sales growth slowed in June due to high temperatures impacting football, suggesting a vulnerability to weather-related consumer behavior. I believe they said the same thing when it was pretty cold as well. So you might say this is a weak excuse or not. I mean, I'll show you why this still is a very, very solid business. If we look at revenue and free cash flow over the past couple of years, if you exclude here the pandemic hit, it's been a story up and to the right, free cash flow positive, although more recently as CapEx has increased, we've seen free cash flow come down, but that's expected to re-accelerate. If we look here at the franchise units, which is the yellow line right here, and the total number of shops in operations, that has also gone up. Total number of shops has grown at a compound annual growth rate of 5.2%, whereas the franchise one has grown compounded 13.8%. The business can be split into two parts. If we look at revenue-wise, retail company managed shops revenue, which is the biggest chunk right here, and then business-to-business revenue, which is the blue bar, which is one that has been growing quite quickly. Well, much quicker than the other part. But looking at the profit side of things, business-to-business is still small compared to the blue bars right here, retail company managed shop trading profits. And so while this might not be your high-tech company or anything like that, this is a solid growing company that also pays a nice little dividend right here. Margins-wise, I think this is very respectable. And so, yeah, I had to put Greg's here on the list because I do also think that this is a very, very popular and I think lovable company in the UK. So if you have any UK viewers, hopefully you enjoy this little coverage of this bonus pick. Moving on to solid pick number one, and that's a company we've talked about plenty of times on this channel already, and that's Evolution AB. Yes, the company that develops, produces, markets, and licenses live casino and slot solutions to gaming operators primarily in Europe and the United States, but also Latin America and Asia. As you can see right now, the company is experiencing a drawdown of around 54% since the peak back in 2021. But even over the past 3 years, stock is still down 47% from its peak and 35% since the peak 12 months ago. Now, this is a company that, yes, you can buy in US dollars as well over the counter, or you will have to convert it into Swedish kronen. This is a company that is growing. Okay, I mean, the pace that it has grown before is much faster than what it's expected to grow in the future. But margin-wise, this is still one of the best companies out there that is trading at a very, very low multiple at the moment. And it's not like they are doing bad right now. Yes, recently, whether it's because of cyber attacks or regulated markets, although they said that they have inflicted that on themselves on purpose. Okay, so it's self-inflicting damage to make sure that the business for the future is more secure and, in my opinion, also is going to be more powerful. If we look at the PE for Evolution AB, it sits at 11.6 times, while the average over the past almost 10 years has been 35.2 times. Of course, like I said, it has grown faster before than it is right now. But if we look at free cash flow growth, still expected to grow in the coming fiscal years. Revenue is still expected to grow as well, around 8% or so compounded. So yes, not as fast as before, but this is still some solid growth for this company. They generate revenue through two segments. One, the largest one, which is the live revenue, right? The live casinos, the things that you probably know. And then a random number generator is the blue bar right here. That's a business that they acquired, as you can see, back in 2020. It has been very, very slow, but more recently, they have seen some more positive signs from that business. Now, revenue-wise, where do they generate the majority of the revenue? As you can see, the last reported one, we've seen that Asia is the largest part, but that has come down a little bit. Europe is second, but then North America is seeing some solid growth. Latin America has been doing okay for them as well. So they said the following: Europe impacted by ring fencing measures, Asia on stable levels, and good momentum in North America, in particular in the live gaming, and new regulations in Brazil are setting in. Now, another thing that was announced more recently, Evolution today announced a new partnership agreement with Bally's Corporation. In this historic first, Evolution is now live in Rhode Island with its online slot games from its renewed slot brands NetEnt, Red Tiger, and Big Time Gaming. This milestone marks Evolution's entry into the state and establishes a presence in all 7 US states which currently offer online casino gaming. And of course, as more and more states might open up to this, I would assume that Evolution will enter those markets in the future. A couple of extra things here. If we look at total revenue for a business, free cash flow margin, operating margin, as you can see, up and to the right. Shares outstanding has, of course, increased here when they acquired that RNG business, but since then, shares outstanding have come down. And here, if we look at net income and then the stock price, we've seen that once, well, obviously during the pandemic when everything was overvalued, the stock price shot up, was overvalued, then it came back down. It followed the increase in net income a little bit, and then net income kept going up, stayed flat, but the stock basically crashed, and we might be making our way back up. Moving on to a French company, Dassault Aviation, the company that builds military aircraft, business jets, and space systems in France. You might have heard of the Rafale, for example. This is the company that does all of that. This is a company worth around 23 billion euros. This is also a company where the stock has done tremendously well over the past 5 years. It's up 251% over the past 3 years, almost doubled, and year to date the stock is up 50%. Margin wise, we're looking here at gross margin of close to 40%, EBITDA 10.6%, net 14.4%, and a free cash flow of 24.5%, a forward PE of 20.8, whereas the past PE, the trading PE, sits at 24.9 times. Revenue wise, we can see that currently the market expects revenue to grow 19% forward 2 years, and EPS 13.8%. Now, trading PE, forward PE wise, as you can see, we are above the average over the past 8 years or so. But as I said, same with Rheinmetall, there's definitely a lot of momentum in that industry, in that business. Total revenue and net income wise, you can see that net income is still expected to grow quite fast, 21.4% in fiscal 25, then another 20% in fiscal 26, and then 14.2% in fiscal 27. Margin wise, as you can see, especially with free cash flow margins, since CapEx does increase a little bit. Did increase in 2023, 2024 as well. Gross profit margin has been stable and then has picked up since 2020. Looking at net income and the stock price, here we can clearly see that the stock is following the net income increase. Now, more specifically on their business, they've seen continued success of the Rafale, 30 exports Rafale ordered in 2024. They're ramping up the production amid persistent external and internal supply chain issues. They delivered 21 Rafale and 31 Falcon, including the first Falcon 6X. They had net sales, and those are highlights for 2024, net sales of 6.2 billion euros and a record backlog of 43.2 billion euros. As for the Rafale business specifically, at the end of 2024, 234 ordered by France out of a total of 507 Rafale. They delivered 14 Rafale in 2024, 56 still to be delivered. They also talked about the UAV, or in this case, the Unmanned Combat Aerial Vehicle. They announced by the French Minister of Armed Forces the development launch of the new UCAV that will complement the future Rafale F5 standard after 2030. It looks pretty cool, can't lie. As for the Falcon side of the business, they delivered the first Falcon 6X, excellent customer feedback after commissioning, and their ongoing development of the Falcon 10X. As for the business itself, as you can see right here, we are seeing growth in order intake, net sales, and backlog. Backlog did increase by 12%. Now, by the way, with most of these European companies, most of them don't report on a quarterly basis. Most of them do report on a semi-annual basis. Moving on to the next company, that's a very interesting one because this is a company based in Helsinki, Finland, but they're listed on the New York Stock Exchange. It's Amer Sports. They design, manufacture, market, distribute, and sell sports equipment, apparel, footwear, and accessories in Europe, Middle East, Africa, Americas, China, and the Asia Pacific. As you can see, this is a company that went public not that long ago, and yet the stock is already up 190%, has a market cap of 21.56 billion euro or dollars here in this case. Trading PE of 100 times, but forward one 48.1. Why is that? Well, it's expected to grow revenue compounded for the next 2 years 15.8% and EPS 44.8%. Margin-wise, it's not that bad at all. Gross margins 56.3, EBITDA margin 13.4, net margin 3.7, and free cash flow margin of 4.8%. And as you can see, this is what has happened with the business. Revenue-wise, compounded since 2021 has grown at 18.2%. Then as for net income, it was a net loss up until 2024. And since then, it's expected to rise quite rapidly over the next coming fiscal years. With regards to margins, that has also improved. We're 47% back in 2020. We're now at 56.3%. As for free cash flow margin, I think we can see this rebound towards, well, we were previously at 8.4%, then we dropped to negative 4.7, then 1.7, 3.8, and well, the last reported one on annual basis, 4.8%. Do see this improving. Here, same story, we can see that the stock price did follow, well, first of all, did follow operating margin, did also follow net income, basically went from net loss to net income, and the stock followed that trend. For those that don't know the company, like myself, I didn't know that this was the name of the company that owned all of the products that I'll show in a bit. So the segments in the business are as follows. You have the group, basically the whole group, that increased 23%, technical apparel increased 28%, outdoor performance 25%, ball and racket 12%. And these are basically the companies that they own. In the technical apparel, you've got here Arc'teryx, and then outdoor performance, you've got Salomon, Atomic, Armada, a lot of ski equipment here. And in ball and racket sports, I didn't know this as well, but Wilson is one of these brands here. So yeah, you might own one of these brands and you didn't know that Amer Sports was the company, well, at the top of it all. Over the past 4 quarters, the revenue trends by channels were as follows: 39% growth for DTC, 12% growth wholesale. As for the regions, and this might or might not surprise you, but APAC grew 49%, Greater China 43%, Americas only 12%, and Europe, Middle East, and Africa 12%. As you can see, that has been increasing quite nicely over the past couple of quarters. Now, I was quite surprised when I saw this slide, to be honest. So Amer Sports is well positioned to manage higher tariffs. So they're already addressing this issue. They said the following: our continued business momentum, diverse global footprint, clean balance sheet, and strong pricing power positions us well to navigate rising tariffs and associated macro uncertainties. Our updated guidance assumes US tariffs on imports from China stay at 30% for the rest of the year, and rest of the world stays at 10%. Given mitigation strategies already underway, we expect negligible impact on our P&L from higher tariffs in 2025. Confident in our ability to fully mitigate over time entire annual impact under a wide range of tariff outcomes. So the outlook for the full year is as followed, assuming, of course, China stays at 30% for the rest of the year and rest of the world at 10%. Of course, these things might change. So reported revenue growth 15 to 17% year over year, gross margin around 56.5 to 57, operating margin 11.5 to 12%. And so, I mean, when you see this, it's not bad at all of a business. Technical apparel, 20 to 22% revenue growth, segment operating expense of around 21%. Outdoor performance, mid-teens revenue growth, segment operating margin of 9.5%, and ball and racket, mid-single-digit revenue growth, segment operating margin of 3 to 4%. Lots of details here, which is what I like about this company. Moving on to the last company, and that's, of course, I think the most famous one, and that's Adyen. So Adyen is, of course, available on the Amsterdam Exchange. You can also buy it in dollars, but that's, again, OTC markets. Now, Adyen is a company worth 48.3 billion euros. Over the past 5 years, it has underperformed the market. It's up only 11%. Over the past 3 years, up 10.7%. And over the past 12 months, it's up 35%. Remember that huge drop that happened here in August 2023, when one, the company was probably a bit too expensive, and two, they did say that over the short term, they expect to take a margin hit because of the investments that they're making in the business. And so we've seen a 50% drop in the stock, but as you can see, that has recovered quite rapidly. This is a company that never trades at a cheap multiple, so trailing PE 51.7 times, forward PE 43.4 times, but margin-wise, I think it's one of the best ones out there. Gross margin 65.6%, EBITDA 47.4%, net margin of 45.9%, and a free cash flow margin of 79.7%. Has been growing revenue 26.2% the past 3 years, compounded. Forward 2 years, 23.6% growth in revenue and 23.2% in EPS. So again, this might sound super expensive. And of course, if you don't have access to fractional shares, then you will have to pay 1,523 euros for just one share. Now, last quarter or last time that they reported earnings, they said the following thing: Adyen's substantial long-term opportunity remains in place, and we continue to build the business guided by decisions that benefit us over that horizon. We did not see any business developments over the first quarter of 2025 that would lead us to update the below financial objectives. Net revenue growth: they aim to continue to grow net revenue annually between the low 20s and high 20s% up to and including 2026. We aim to improve EBITDA margin to levels above 50% in 2026, as we expect to benefit from operating leverage inherent to our business model. As for CapEx, we aim to maintain a sustainable capital expenditure level of up to 5% of net revenue, which again, all of these targets I think are going to be achieved quite easily by them. Looking at trading PE, as you can see, this is a company that was never trading at, well, a cheap PE or a low PE, but more recently it has been lower than the average. Overall, if you look at total processed volume, whether it's digital, unified commerce, or platform, this has been going up and to the right. Here as well, you can see the net income of the company and the stock price. As always, 2021, everything was overvalued. Then we went back to normal with also that one-time overreaction. But since then, it seems like the stock price is following net income up and to the right. Looking at revenues over the last 10 years or so, gross profit margin and operating margin, as you can see, yes, we were peaking basically back in the pandemic. Then operating margin and gross profit margin went down, but it does seem that back in 2023, that was the bottom. And since then, it has been improving every single quarter. And as they said, I think this is going to keep on improving. This is one of the best, I'd say, European companies out there that might not be as popular as all the rest. Of course, we can talk about plenty of other companies, right? Because if we look at this list here, right, we could be talking again about Novo Nordisk, we could be talking again about LVMH, ASML, Airbus, maybe some other German companies, multinationals. We can definitely be talking about Hermes or Ferrari, for example. So the list goes on and on. There are definitely a lot of quality companies in Europe. There are a lot of quality and boring companies, a lot of companies in finance sector. So yes, those might be boring companies, but as you can see, a lot of them are beating the market and especially also US equities year to date. Of course, over the past 10 years, I would assume that a lot of these companies do underperform, underperform American equities, but there are definitely a lot more quality names than just a few that I've mentioned in this video and a few that I've mentioned in the past as well. If you own any of those names, and those are very interesting names, do let me know down in the comment section below. If you enjoy this type of videos, hit the thumbs up button, subscribe if you have not, do check out fiscal.ai. Link is down in the description, and I see you all in the next one. Bye bye.